Okay, so you sent over a ton of stuff on Transformers and Rectifiers
Yeah.
India Limited,
Yeah. Oh,
Carol.
yeah. Terrell.
And we've got like the Q4 FY25 conference call. We've got their year-end financials. We've got the investor presentation.
Yep.
And I think our mission today is to kind of like go through it all
Yeah.
and pull out the important stuff
Exactly.
for the listener.
Yeah. So Terrell is a major player in the Indian transformer market.
Yeah.
In fact, they're the second largest manufacturer by capacity.
Wow.
And when we say transformers, we're talking about a whole range.
Hmm.
Everything from those huge power transformers you see at substations
Right.
up to really specialized ones
Okay.
used in things like locomotives,
Really?
even green hydrogen projects.
Wow.
They also make reactors, mobile substations. It's a really comprehensive offering.
So they're doing it all.
Pretty much.
Yeah, and it's B2B, right?
Yeah, business to business.
They're supplying to the big power generation companies.
Right.
The transmission, the distribution companies, various industries.
Exactly.
It's not just India.
No, they've got a global footprint,
Wow.
over 25 countries.
Okay.
So that's pretty impressive reach.
Yeah, and their installed capacity is around 40,000 MVA.
Yeah, it's a massive scale.
Yeah. So you gave me a look at their latest earnings call from April 8th, 2025. Their integrated financial report for the year ending March 31st, 2025.
Yeah?
And the investor presentation from the same period.
Right. We've got a pretty complete picture here.
Yeah, so let's unpack this because
Yeah.
FY25
Yeah.
was a record-breaking year
Big time.
for Terrell.
Huge year for them.
So we're going to dive into their financial performance.
Okay.
The numbers are pretty striking.
Yeah.
We'll look at some of their key operational wins,
Right.
their future plans,
Uh-huh.
with a focus on backward integration.
Right. Making their own stuff.
Yeah, and some of the kind of interesting details that came out during the investor call.
Sounds good. Let's start with those record-breaking financials.
Yeah.
What were the standout figures for you?
Well, first off, they achieved their highest production volume ever,
Okay.
29,118 MVA.
Wow.
Now, to put that in perspective,
Yeah.
that's a huge jump from the 16,425
Uh.
MVA they produced in FY24.
Okay.
And obviously, this surge in production led to record high revenue growth.
Makes sense. More production, more revenue.
Yeah, across the board.
It's fascinating how directly that production increase impacted their earnings.
Right.
But it wasn't just about making more. They also brought in a record level of new business.
Absolutely. They secured 4,504 cores in new orders
Wow.
in FY25,
Okay.
which is fantastic.
Yeah.
And that's resulted in a really robust unexecuted order book of 5,132 crores
Okay.
as of the end of March 2025.
Right.
So that means they've got revenue visibility for the next 15 to 18 months,
Yeah.
which offers a nice degree of stability.
And that big single order, can't forget that
Yeah.
the 740 crore deal with GATCO.
In March 2025,
Huge.
Gujarat Energy Transmission Corporation,
Right.
major player in the transmission sector.
Yeah.
And not only was that the largest in Terrell's history, it sounds like it might have been a record for Jektico as well.
Oh, wow.
So that's a big deal.
Yeah. And they also successfully raised 500 crores through a QIP,
Right.
a qualified institutional placement.
Yeah.
It's a way for listed companies to raise capital.
Yeah.
They did it quickly.
Wow. So they're funding their future.
Yeah. This capital is earmarked for their backward integration
Okay.
and expanding their manufacturing capacity.
Right. So making their own components and scaling up production.
Exactly, which we'll explore later.
Smart move to secure the funding proactively.
Yeah.
So let's look at the actual revenue and profit.
Okay.
How did all that activity translate into dollars and cents?
Or I guess rupees and pays.
Yeah.
So at the group level, they achieved revenue of 2,051 crores.
Okay.
Their standalone revenue was just slightly lower at 1,950 crores.
And that standalone revenue grew by a massive 53%.
Wow.
Compared to FY24,
Yeah.
where they recorded 12,273 crores.
That's a big jump.
Huge year-on-year jump.
Yeah, so how did that flow down to profitability?
Well, their standalone EBITDA hit an all-time high of 320 crores,
Okay.
up by 149%,
Really?
from 129 crores in FY24.
Yep.
And they're even and a consolidated PT of 216.44 crores.
Yeah.
a huge jump from 47.01 crores.
So these aren't just small improvements.
Right.
These are significant leaps in profitability.
Yeah.
It really suggests a turning point for the company.
Yeah, and it's not just about the income statement, is it?
No, their balance sheet looks stronger too.
Right. Their return on capital employed saw a massive improvement.
Okay.
Going from 6.7% to 22.76%.
Wow.
That tells us that they're generating a lot more profit.
Right.
For every rupee of capital invested.
Yeah. That's a clear sign of improved efficiency and a key indicator for future returns.
Right. And their debt-to-equity ratio has plummeted to just 0.02, down from 0.84.
So they're almost debt-free.
Yeah, they're well on their way to becoming a net debt-free company.
That gives them so much more flexibility and less risk.
Yeah, and even their efficiency in managing day-to-day operations has improved.
How so?
Their debtor days have come down significantly from 156 days to 114 days.
So they're getting paid faster.
Yeah, which is great for their cash flow.
Yeah, definitely.
So overall, FY25 looks like a stellar year financially for Terrell.
Absolutely a financial triumph.
Yeah.
So let's shift gears a bit.
Okay.
What operational milestones underpinned this success?
Right.
Particularly in that last quarter.
Okay. Well, on the technical side, they successfully completed dynamic short-circuit testing of a massive 500 MVA 400 kV transformer.
Wow.
That kind of testing is crucial for proving reliability and resilience.
Yeah, especially for those high-power transformers.
Right.
That's a significant achievement, shows their engineering capabilities.
And they also completed short-circuit testing on an 8.8 MVA inverted-duty transformer.
Okay.
That met the latest CES specifications.
So they're keeping pace with industry standards.
Right. And they also made good progress on their fully automated radiator facility.
Uh-huh.
And the approval process with PGCL was formally initiated during the quarter.
And that automation should lead to increased efficiency.
Right. And better quality.
Right.
And in December 2024, they had a record number of transformers tested.
Really?
Both in terms of total MVA and the number of individual units.
Wow, that shows the increase in production output.
Right.
But maybe the most significant operational news was their move towards self-sufficiency.
Yeah, they entered into a technological tie-up to accelerate their backward integration.
Right. Reducing their reliance on outside suppliers gives them advantages in quality control, faster lead times, and potentially lower costs.
Yeah.
And they went even further.
Yeah, they acquired a full 100% controlling stake.
Wow.
In a CRGO processing unit.
Okay, what's CRGO?
CRGO stands for Cold Rolled Grain-Oriented Steel.
All right.
And it's a critical raw material. That makes up something like 30 to 35% of a transformer's total cost.
Wow, that's a big chunk.
So owning a CRGO processing unit is a major step towards self-reliance.
Yeah, that's a game changer. It gives them much greater control over the entire process and their cost structure.
Right, so it was a smart move.
Definitely.
Okay, so strong year behind them.
Yeah.
Where's Terrell heading next?
Right. What are their growth strategies?
Yeah, for FY26 and beyond.
It sounds like they're not slowing down.
No, they're not resting on their laurels.
What are their main areas of focus?
Well, they want to consolidate the gains they've made.
Okay.
Expand globally.
Right.
And maintain sustainable profitability.
So not just growth, but profitable growth.
Exactly.
And their long-term vision of hitting US $1 billion in revenue in the next 3 years. That's still their goal.
Yeah, they seem optimistic.
They've got some clear strategies to get there.
Like what?
Well, as we've talked about, strengthening their backward integration is key.
Right.
Aiming for almost 100% self-sufficiency in components.
By when?
By the first quarter of FY26-27.
Okay.
That CRGO acquisition is a big step in that direction.
Yeah.
They're also planning big investments in automation and digital transformation across their operations.
That's going to help them scale up.
Exactly.
And they're definitely positioning themselves to benefit from the trends in the power sector.
Right, with a focus on clean and sustainable energy solutions.
Yeah, those specialized transformers for green hydrogen.
Yeah, and ammonia production.
Right.
They're also planning some pretty ambitious capital expenditures.
Yeah, they're looking to invest 550 crores in expanding their capabilities over the next 15 months.
So increasing their core transformer manufacturing capacity and more backward integration initiatives.
Right, and that really shows their belief in future demand.
Yeah, for sure.
So where is all this expansion happening?
Good question.
Well, they've got a 15,000 MVA capacity expansion underway in Andhra Pradesh.
Okay.
The first phase of that should be operational by May 2025.
Right.
And then there's a massive 22,000 MVA expansion happening at their EHV Transformers and Maria facilities.
Wow.
That's expected to be completed by February 2026.
So when all of that's done, their total manufacturing capacity will be
65,000 MVA.
Wow, that's huge.
Yeah.
They're getting ready for some serious growth.
Yeah, and for FY26, they're aiming for about 8,000 cores in new order inflow.
Okay.
And they're projecting to dispatch around 3,500 cores worth of transformers this year.
So their existing order book is converting into revenue.
Right.
What about profitability going forward?
They're aiming for a PATE level of around 10%.
Okay.
And they think their profit margins will continue to improve from the higher production volumes and the benefits of backward integration.
Makes sense.
They've even provided a margin guidance
of
16–17%.
Wow, that's impressive.
Yeah, so it looks pretty healthy.
It's good to see them focusing on profitability as they grow.
Yeah.
And it sounds like they're also exploring new markets.
Yeah, they're looking at entering the HVDC transformer segment.
Okay, high voltage, direct current.
Yeah, they already have the capability to manufacture transformers up to 1,200 kV. So HVDC seems like a logical next step.
Yeah, a natural extension of their expertise.
Right.
What about exports?
So right now, about 15% of their order book is exports.
Okay.
But their main focus is still the domestic market.
Makes sense.
Because of the huge opportunities there.
Right.
And what they believe are better margins.
So they're focusing on where they see the most potential.
Exactly.
The conference call also provided some deeper insights.
Yeah, there were some interesting details in there.
What stood out to you?
Well, they mentioned that the really high margins in Q4 FY25 were partly due to some high margin orders.
Okay.
But they said the full year margin of 16–17% is a more realistic outlook.
That's helpful to know.
Yeah, so the last quarter was exceptional.
Okay.
But the full year gives you a better overall picture.
It's good to have that context.
Yeah. And they also talked about what's driving their growth.
What did they say?
It's a combination of government spending and private investment.
Okay.
Especially in power grid infrastructure.
Makes sense.
And they shared an interesting statistic.
What's that?
India is going to need 381 large transformers.
Okay.
220 kV and above. And 193 reactors over the next 6 years.
All right.
But the current domestic capacity is less than half of that demand.
So huge potential for growth.
Yeah, that really highlights the opportunity in the Indian market.
Definitely.
And they talked about the benefits of backward integration.
Yeah, it's not just about cost reduction, is it?
No. They said the main advantages are improved quality control, greater operational efficiency, and reduced lead times.
So it's about control and speed.
Exactly. And those things will indirectly support margins.
Right.
But their immediate focus is on controlling their inputs.
Okay.
And they've secured long-term supply agreements.
So for
CRGO.
Okay. Smart move.
From mines.
So they've got their raw materials locked in.
Yeah, which reduces their risk.
Great. Yeah, they also seem to be managing their working capital well.
Yeah, they said the improvements they've made are sustainable.
Okay.
With a target of maintaining around 120 days.
That's a significant improvement.
Yeah, frees up cash.
Exactly.
And they also hinted at potential future orders.
Oh, really?
They said they've got over 22,000 cores worth of inquiries.
Wow.
Under negotiation.
That's a lot.
And about 70% of that is in the EHV transformer segment.
Okay, the high-value contracts.
Right. So that's a healthy pipeline.
Yeah, and they're actively working to strengthen their operations.
Yeah, they talked about a technical tie-up for manufacturing bushings,
all right,
which are essential insulating components. And this partnership will improve their supply chain and reduce lead times for those parts.
So again, it's about control and efficiency.
Exactly.
And how about that 550 crore CapEx?
Yeah, so 40% of that will go to organic growth,
like
expanding manufacturing capacity, and 60% will go to backward integration.
Okay, so they're committed to both.
Yeah, and about 400 crores of that will be spent in FY26.
So a clear focus on these areas in the near term?
Right.
They also touched on some emerging opportunities in the energy sector.
Yeah, they said they're well positioned to capitalize on the growth in rectifier transformers, which are used in the production of green hydrogen and ammonia.
Right.
They're already getting inquiries globally in that area.
So getting in early on the green hydrogen sector.
Yeah.
Smart move.
And they addressed some external factors that could impact them.
Like what?
Well, they don't expect much impact from the U.S. tariffs. Because their products are currently exempt. And they said the U.S. market isn't a primary focus for them right now.
Interesting.
They're looking at markets with better revenue and margins.
Okay.
And they'd like to see about 10% of their business from exports.
Uh-huh.
But the strong domestic demand is their priority.
That's a sensible approach.
Yeah.
Focus on the most promising markets.
So to sum it all up for the listener, what are the key takeaways?
Well, it's a story of exceptional performance and strategic positioning.
Right.
Terrell has not only delivered record-breaking financials,
Yeah.
but they've also laid a foundation for future growth.
Through backward integration.
Exactly.
And capacity expansion.
Their production increase and profitability jumps are amazing.
Yeah, and that GATCO order was a big win.
For sure.
And the 500 crore QIP gives them the resources they need.
Yeah, they're well-funded for their plan.
Right. Their commitment to becoming self-reliant is really a game changer.
That CRGO acquisition is a prime example.
Exactly.
More control over their operations and costs.
Yeah, and they're investing heavily in expanding manufacturing.
So they're ready for the growth in India's power infrastructure.
Yeah, and they're smart to focus on the domestic market.
Right.
Where the demand is strong.
And the margins are good.
And that billion-dollar revenue goal seems within reach.
It does, given their momentum.
Yeah, so as Terrell pushes towards self-sufficiency and India's power infrastructure grows.
What other potential benefits or challenges might they face?
Yeah.
It's an interesting question as these developments play out.
In the energy and manufacturing sectors.
Right.
We encourage you to dig deeper into all this.
Yeah.
And think about the implications.
Of Terrell's performance and plans.
Thanks for joining us for this deep dive.
Yeah, thanks for listening.